Apartments, the ultimate income generator. Now that you have an idea of what investing in real estate encompasses, let us pull back the curtain and show you exactly how it works. Let's take a look at a simple example of the true wealth-generating power of multifamily investments and the relationship between net operating income, NOI, and capitalization rates, cap rates. NOI equals income minus expenses. Net operating income, NOI, is a calculation used to analyze the profitability of income-generating real estate investments. NOI equals all revenue from the property minus all reasonably necessary operating expenses. Cap rate equals NOI divide current market value. The capitalization rate is the rate of return on a real estate investment property based on the income that the property is expected to generate. If you buy an underperforming 100-unit apartment complex comprised of all 2-bedroom, 1-bathroom units, and each of those units rents for $700 a month, your gross income will be $70,000 a month, or $840,000 a year. For the sake of this example, let's assume there are 0 vacancies and that your expenses are 50% of your current revenue. At the end of the year, your net operating income will be $420,000. At a 7% cap rate, the value of your property would be $6 million. Because this property is underperforming and renting for well below market rents, we're able to raise rents in each of those 100 units from $700 a month to $800 a month, yielding an additional $100 a month in revenue. $100 a month multiplied over 100 units is a total of $10,000 a month, or $120,000 annually, bringing our annual revenue from $840,000 to $960,000. Just because we raise the rents doesn't mean that our expenses will increase. They should stay roughly the same as they were prior. So our new annual income of $960,000 minus our existing annual expenses of $420,000 leaves a net operating income of $540,000 for the year. Divide that NOI by the same 7% cap rate, and the new value of your property is over $7.7 million. That's an increase of over $1.7 million just by raising the rents $100 a month. Let's look at another opportunity with the same property. Currently, the landlord is including water, sewer, trash, and pest control in the rent. We see an opportunity to bill those costs back to the tenants at a cost of $30 a month on top of their existing rents. So let's do the quick math. $30 per month times 100 units is $3,000 a month in additional revenue times 12 months. That yields $36,000 in additional annual revenue. Again, at a 7% cap rate, we've generated another $514,000 in value. That brings our grand total to over $2.2 million in value. At a 6% cap rate, the added value would exceed $2.6 million, and at a 5% cap rate, the added value would exceed $3.1 million. This is why multifamily real estate can be so powerful in creating massive amounts of wealth. Put your money to work. 4oakscapital.com